All right, what is up, tycoons? Super excited for today's video. We're going to start it off by looking at the 60K portfolio challenge. Okay, so I've got a 60K portfolio challenge on the channel. Currently, it's up 23% on the cash that we have invested. There was originally a 38,500, and that has gone up to 50,000. We have 12,000 in cash. We're selling cash secured puts, we're selling covered calls, and it is a pretty good dividend portfolio as well, right? As you can see, it's got a 10% yield and annually getting about $4,030 in dividends. Okay. So just wanted to shout that out. And you can see all the stocks, all the sectors it's in, and it really breaks it down really good. So make sure to check those videos out and we'll jump straight into the charts now. Okay. So we're going to start off by looking at SPY, all right, the S&P 500. And what we have here is our volume profile, okay? So all of this over here, this shows you volume by price, right? Most people are very familiar with volume by time, but they aren't as familiar with volume by price. Okay, one of the reasons it's very important is it's going to show you, again, where the volume is by those price levels, and it shows you where some volume gaps are, right? And so that's what these two things are. And you'll see these a couple times in the video, these low volume areas. They do two things, okay? So what it's going to do is it's going to establish an area of resistance or support, right? And if we come down here and look, right, this was a very strong support level right in through here, right? And we were able to push higher, or it creates a wall of resistance, okay? And the reason being is because there's either going to be, not enough volume up here at this low volume gap, right? Basically between 400 and 405, okay, on the SPY. It's either going to be a major resistance level where there's not going to be enough volume to push the price up higher, or it's going to be, an area that you pass and move through very quickly because, again, the volume by price isn't there, and it's going to climb and reach the higher volume prices. And so it'll basically move quickly, up to 405. And if the buy volume and momentum continues, right, it's basically just going to blow right past 400 and go quickly up to 405 and continue adding up higher, right? Now, there's a lot of important things that we need to pay attention to. And I also want to help you guys understand a lot of the recent market movements. Okay, the price action has been following, some historic trends, right? If we look here, this purple line right here, this is our 200 moving average, and we're looking at the weekly chart. Okay, that is a very, very, very big support level, right? And as you can see, we came down, okay, we wicked down below it, right? But we have rallied very, very nicely afterwards since then, okay? And, the reason being is, again, this is a huge psychological level, right? When it comes to long-term investing, and especially with institutions, right, they're not going to ignore it at these levels, right? They're going to pay close attention, and they're going to be buying a lot, especially if we do get that bounce, right? Now, I also want to highlight this 50% level. This is the 50% retracement from the COVID lows to the all-time highs up here, okay? So what we did was we came down and look, we tested that level, right? We just barely hit it and we have bounced very, very, very hard, okay? Now, the 61.8, the 50%, and the 38.2 are the three most common retracement levels. And so that's what we're looking at here. If we zoom in a little bit more, right, and take a look at this, what we can see, right, is that, we bounced off of our low volume area, right? Remember, I told you it creates that wall. So there really wasn't any, price action. There really was very little trading in this area right here, right? Buyers stepped in and pushed the price back higher up through this level. And now we're approaching this level right here, 416. That is going to be the 61.8 retracement of this move down, of the big move down, right? Nothing is going to move in a straight line up or down. It's going to retrace, right? And so what does that mean? Well, this is a very, very common, looked at number, right? It's also known as the golden ratio. And so normally you would expect a bounce at this level. So we're coming up here to this level right now. And then we also have our volume, our low volume area right above that acts as a strong wall of resistance, or an area where we're going to blow quickly through. So with all of that being said, 400 is really a big psychological level for the SPY. Okay, we may come up and consolidate right here in this level, and before we really figure out what our next move is going to be. If we zoom in down to the daily chart, okay, and take a look at the daily chart, you can see on the daily chart, we're still trading below our 200 moving average. Okay, again, that really, really big, important psychological level. But I want to highlight a few things as well, right? And those are going to be the gaps on the daily chart. So this is a gap right here. And this is a gap right here. And then we also gapped up really, really big on the CPI report. So we have two smaller gaps up on SPY to fill, right? We have one around 421. We've got one right here, right around 408. And then we have this really big one down here, down to about 381, 382. Okay. So we really are set up to make a big move after this week, right? This week coming up is going to be critical for the market, okay? Most likely we're going to come up here and test this 61.8 retracement level right around 400 on the SPY. And we're going to see, is it going to be a strong resistance level that pushes us back down lower, right? Now, if we drop lower, we have our 50% retracement of this move down and then back up, right? This is going to be an area potentially where we could see a bounce, right, and head up higher. So, just because we pull back, if we do pull back, it doesn't mean we're going to fill this gap right away. We have a major support level here at 390. Okay, so 400 and 390 are going to be some really critical areas for us to see. Are we going to come up, pull back, bounce here, and then start to fill these gaps up here to 408 and 420? Or, maybe we come up here and we try to get to the top of this low volume area, and then the buying volume just dies off, and we come back down and then go and fill our gap to the downside. All right, there's those are two things, two different scenarios that I can see, right? And another thing is that look at our 200 moving average. It's right up here where the gap fill is on 408. So if we are able to break past the 61.8 retracement level, there's a good chance that most likely we're going to blow past this low volume area and come up to fill the gap, and then possibly get rejected at our 200 moving average, right? If we look on the daily chart, this was the last time that we hit it was in August, right? August 16th, we came up and we hit the 200 moving average and just completely dropped afterwards, right? And very, very, very big drop that a lot of people weren't ready for. But, using these technicals, you can start to understand, what really are the major key levels, right? And so that's for SPY right there. We'll take a look at QQQ next, and we'll go back and pull up our weekly chart, okay, and take a look there. And QQQ, very similar, except, tech has been bleeding a lot more. We're going to look at IWM after this, but I want to highlight how we broke through the 50% retracement, right? This is our 50% retracement from the COVID lows up to the all-time highs. We broke through that on QQQ, right? And we were trading below the 200 moving average on the weekly chart a lot more. But look at where we bounced, right? At the 61.8% retracement level. That's our golden ratio, right? And again, we have a low volume area right here. It either acts as a wall of support or resistance, or an area where you're going to quickly move through those price levels, right? So we're seeing that we came through here into our low volume area. We bounced at our QQQ 61.8 golden ratio, right? Which that was right about 258. And we're going up higher, okay? And right now we're battling this 286, 82 resistance level. That's our 50% retracement level. But, if we come down to the daily, again, what we'll see on the daily chart is, we have two gaps up to fill, just like SPY, all right? We're a little bit closer to our 200 moving average. And, the 200 moving average is up above this gap right here. So, we may come up and try to fill this gap right around 308, 307 area. If we are able to, keep this 286, 50% retracement level as a support, right? We're breaking through it. We're going to look to see if we can come up, possibly test this 100 moving average here, get a pullback, and then continue up higher, right? If we can do that, most likely we are going to fill this gap and then come up here and test our 200 moving average. Now, we do have a gap up here to fill. This is right at about 360. I wouldn't expect this gap to be filling anytime soon. but I could see this gap potentially filling in the more near-term future. Now, again, we may come up, hit resistance, and then come back down and fill this CPI gap, all right? But for right now, there aren't too many negative catalysts, except we do have PPI and then the next jobs report. Okay, those are going to be the catalysts you have to look out for. But until then, really, most of the attention is going to be fixed on the next CPI report, because that's really going to determine, okay, well, was this current CPI report that came out where that showed inflation finally came down, was that just, a fluke? And was it a one-time thing? Because that did happen this summer, right? We had inflation come down a little bit this summer, and then the next reports came in hot again, right? And so we don't want that to happen. We may ride the upward momentum, but then, you have to be cautious coming into December of these gaps down if these gaps down aren't filled, right? Preferably, I would like to see these gaps down fill in the shorter time period, okay? So that way we can get that over with and not have, these gaps really just, drawing the price to them, right? And attracting them, because again, these gaps on the daily charts, they fill about 90% of the time. The big question is when, not if, right? And so a lot of these gaps down from the previous bull markets, they're filling in today's market environment, in today's bear market, right? There's gaps down on Meta. When Meta, tanked on earnings, you know what it did? It fell exactly to a very low gap down it had that people didn't think it would ever go to in a long time, right? I didn't think it would honestly go down to those levels, but I have alerts set at all these gaps across the stock market, and I just got tons and tons of alerts. Disney, when Disney just collapsed, you know where it just collapsed right into? It collapsed right into its daily gap down that it had. So, you have to be really mindful and pay attention to these, which is why I'm trying to bring them to your attention. The next stock we'll look at is going to be IWM, and IWM has been a lot stronger really than the others. Okay, if we go ahead and take a look at our retracement levels right here, okay, we can see, we were trading a little bit lower. We did break the 50% retracement level a couple times on IWM, but more recently it's been going up almost in a straight line. It's been showing a lot more strength, especially than tech. So if you do want to trade bullish, IWM has been the play here recently. We'll see if those things switch up and if it's going to rotate back into tech, as people are thinking that the rate hikes are possibly going to slow down due to this latest inflation report. That may take some of the hype and momentum away from IWM. But really, IWM has been outperforming here recently in recent market weeks. It's definitely been the way to go and to trade. It's pretty much been a straight line up the past month, and doing pretty well, even with a lot of the major earnings that we had in there. Okay, so 170 is the 50% retracement. All right, we're currently right at our major resistance level, 187.63. Okay, you see we closed at 186.90, basically 187. This is our 38.2 retracement level right here. So, we wicked up, we touched that level, and we ended up coming back down. If we are able to get past this level, okay, we could be heading back up to 209 on IWM. And we go to the daily chart, all right, and we'll take a look at the daily gaps right here, okay, and you can see this is what I mean by these gaps fill 90 to 95% of the time, right? We can see, again, IWM's been outperforming. It's currently above the 200 moving average on the daily chart, which we just took a look at SPY and QQQ. Those are not above their 200 moving average on the daily chart. It also recently filled its gap up, okay? So this is, just an example of, those gaps coming up and filling. Now we do have the gap down from CPI. There is another gap up to fill, but it's not one that I would expect to fill anytime soon. It's a lot closer to the all-time highs, and the gap right there is going to be right around 229, 228 level. That's where that gap is on the daily. Okay, now let's go ahead and jump into Apple, because Apple is pretty much the most important stock there is to watch. There's really when it comes to institutional investing, hedge funds, and just financial advisors, there's really not many strategies that cannot have Apple in the portfolio. Reason being is not only is it a growth company, but it's also turned into a value company, and really just so many people have this in their portfolio. Now, what I want to highlight on Apple is that we don't really have a gap up on the daily chart. Okay. Again, we're looking at the support and resistance levels we have on here are going to be from the COVID lows to the COVID highs. You can see that we've been holding the 38.2 retracement level pretty well. We traded below it for just a couple days, and we do have a very minuscule gap down to fill right below 133.36, which is basically going to be 133. So we have two tiny gaps down on Apple on the daily chart, and we have a major resistance. Okay, our 23.6 retracement level is going to be right at 152.31. So if Apple wants to continue heading up, right, this is going to be the level that we really need to watch. If we get a strong rejection there, we need to be cautious that we could try to reverse and come and fill these gaps down. Now, Apple recently killed it on earnings. I wouldn't even say crushed it, but just because their earnings was basically not bad and it was actually semi decent, the stock reacted really well, but what's really going on is there's lots of developments. Okay, there's demand issues. Okay, with the iPhones. In China, they have a couple factories. Okay, that are basically shutting down. Due to this whole COVID zero COVID policy in China. And then production levels are said to be cut by as high as 50% in those areas. Now we are heading into the holiday season. So that may help them out. We may get that Santa Claus rally, heading into December. But 152.31 is going to be that key level we need to watch out for. And then our 200 moving average is going to be another key resistance level. That's basically right at 155. So if we do break 152, most likely we're going to come up to 155 to test that level. And if we can reclaim the 200 moving average, that's going to be really nice. But so far this year, nothing has really stayed above its 200 moving average very long. Okay. Now that's really because of this bear market that we're in. The stock market is forward looking. So, as we look into 2023 and 2024, as 2022 is ending, they're going to be forward looking. And if the data comes out and it seems that inflation is going to be, finally dropping and they're going to have control over it in 2023, then there is the chance that we can actually reclaim the 200 moving average as support. Because as you can see, again, nothing's really lasted above there, right? We make it up above there, but as soon as we come down to test it, we break right through it, right? And we come back up again, and then we break right through it. We come up here again to it, and then we break right through it to the downside. And that's just kind of been the trend and the pattern that we're seeing, right? So Apple, not really any daily gaps up to fill. But we have two small daily gaps to the downside to fill, right? We've got one here at 138.50, and then we got one right here at 133. So need to be cautious of those, but try to ride the bullish momentum while you can, if you can. Another one we'll look at, okay, is going to be Tesla, and we'll break down Tesla for you guys. We'll go over here to our weekly chart, okay, and let's go right here, and we can see that Tesla recently also, just like the beginning of the video, was trading in a low volume area, right? So we have a low volume area, and we know, by now from watching this video that it's either going to create a strong wall of support or it's going to create an area we're going to quickly drop through those price levels, right? Well, look at where we bounced. We bounced right near our 61.8 retracement level. That's that golden ratio. And then we also have the low volume area. So we had two areas that could possibly be a strong support level. That's where we're at right now. We did wick down below it, all right, but we were able to close basically right up here to where this volume area is. Now, you have to keep in mind that Elon Musk has been dumping shares. He's been dumping about $20 billion worth of shares. That's creating a lot of outflows. And then also, Tesla has, kind of just been, I wouldn't even say that they're putting out bad forecasts for the future, but they're not expected necessarily, to keep crushing it on earnings in the upcoming year. All right. So let me see here if I have a daily drawing up for Tesla, so we can take a look at the daily gaps. Yeah, we do right here. And, there's just a few examples of gaps filling on the daily chart. So I just wanted to highlight that for you guys. Right here, we have a nice little example. You have a gap between this candle and this candle, and eventually we come through and fill it, right? That's what I mean by 90% of the time these gaps fill historically in the stock market. The main question is when, right? If we look at this gap, when we gapped up after earnings, right? So here's our earnings date. And then, Tesla ended up reporting earnings. And then the following day, we opened up here much higher than this candlestick right here and created this gap down to fill, right? So earnings came, we ride the momentum, we continue heading upwards, and eventually we come down and we fill this gap from the past, right? And if we can take a look at the time period, this was the earnings in July, all right? And then we come over here and the gap doesn't fill until October. So it took 3 months for that gap to fill, and it only took 3 days for this gap to fill. So again, the main question is when they're going to fill, not if they're going to fill. So it's very important to chart these gaps up and just keep them on your chart. We have this gap up here to fill, right? And we recently just filled this gap right up here to about 196. So we have a gap up to, let's say, about 263 on Tesla that we could see. Now, the main thing to pay attention is, a lot of people use the moving averages to gauge sentiment, right? And kind of like direction, right? And if we look here, all of them are trading below. We're trading below all of the moving averages right now, and we're trading pretty far below. So, sentiment is pretty bearish on Tesla. We look, we're coming down, we're retracing, and then we're just continuing the move downwards. Tesla would need to come up and make a higher high, right? So we need to make a high and then a higher high. That's going to put us right around our 50 moving average, which is going to be close to 240 to 245. All right. That is where you need to see Tesla, to see a trend reversal, especially on the daily chart, right? That's the main thing that really I'm going to be looking for, because for now we're making, a high and a lower high. Again, we need to change this to a high to a higher high right around our 50 moving average. If we're able to break through that and it's not a very strong resistance level, then we have a chance of coming up here and filling that gap to about 262, 263 area. All right. So that's basically it for today's video. Just wanted to break down basically the top stocks, right? Pretty much everyone trades Tesla, they trade, Apple, they trade SPY, they trade QQQ, they trade IWM. So, I'll be looking to cover these stocks a lot more and just kind of give you guys quick updates on them, maybe once a week. We do day trade pretty much all of these stocks every single day. Maybe not all of them, but, one of these 5 stocks in our Discord, we're pretty much trading every day. And if you want to join that Discord, okay, we have people making $10,000 a day. We have people making $1,000 a day. And it's not through long-term investing, right? Now we do encourage that, right? But we're really much more of a day trading and swing trading Discord. So the link to join is in the description below. Use code Zachly for a discount, and you'll be able to join, the Discord and get yourself a discount on the membership, right? If we take a look at the profits tab, the profits tab is just very, very nice, right? Recently, someone took their $500 account to 2,500, and that was pretty much in about a week, right? Big moves, right? Again, we're trading all the time, 40% on SPX, 9% for the whole account on the day, 20% day right there, 40% day, and then turn 500 and 1,600 in 3 days. Now we already saw that account went up to 2,500. We got 20%, 26%, 91%. Really, really big days, 488% right there after taking her second training course with Tycoon Leon, right? So Tycoon Leon is basically the guy who runs the show and is the most active admin member. There's 3 admins, okay? They're all going to be posting their analysis, right? You can see the analysis that he's got right here. You can see, I have my analysis coming in here. We have Buddha's analysis in here. And, you really get a whole team. It's not really just me behind this. There's a whole team, and then look at all of the intel that we have, right? There's so many intel flows in here. We recently added the AI bots, and the AI bots have been absolutely fire, honestly. Like pretty much each one of these plays has been anywhere from 20 to 50% trades. And we really like it once we see the rocket on it. Once you see something with over 70% confidence and a rocket on it, man, that's a good play right there. Now, sometimes we do switch up the expiration dates or switch up the strikes. But, when you pay attention to, the symbols, and the confidence of the AI bot. Pretty much everyone in the Discord is in love with it, and has made a lot of money off of the bot. So again, use the link in the description to join. Use code Zachly as well to get yourself a discount, and I'd love to see you there.